Awesome. Good afternoon, everyone. My name is Dave Rodriguez. I'm the head of commercial here at Blockworks. Today we're here to talk about something near and dear to my heart, which is the state of the union of liquid token markets. And to immediately address the elephant in the room, tokens are down bad. Since 2025, cycle highs of 2025, most tokens are down 60 to 90%. Obviously, not including Bitcoin and maybe ETH. I've been around for multiple cycles. This is nothing new. I'll say what's striking about this difference is that institutional era is actually here. Institutions are adopting the technology. The regulatory headwinds that this industry is largely faced are turning into tailwinds. And despite all of that, the sentiment around tokens are probably the worst I've ever seen it as someone that's been in the market for 8 years. I think everyone on this panel here has been in the market probably at the same amount, if not longer than me. And I personally struggle to figure out, like, what does it actually mean? Do institutional adoption actually, will any of this translate into token value? And yeah, I think what we're trying to figure out is, like, what is the market getting wrong about tokens? What is it going to take to actually change the sentiment around tokens? And I'm not a subject matter expert on this topic, but what I do have here is some of the sharpest capital allocators in the room to really help us, I think, determine what is the next stage for liquid token markets. So without further ado, would love to hand it off to you guys to introduce yourselves, the fund that you represent, and also maybe even like a one-word blurb or one-sentence blurb about where do you think the state of the union is today for liquid markets. So Seth, I'll pass it over to you, and then we can go down the line.
Hey, I'm Seth Gins, managing partner at Coin Fund, and I'll explain the co-founder TBA. So I'm managing partner, run the liquid fund at Coin Fund since the beginning of 2020. We're spinning the liquid fund out, so that's what that is a reference to. My background is 18 years of public equities investing at Jennison Associates, so large cap growth investing, and then running a fundamental liquid crypto fund. State of the market, one-liner, I'd say I think we have the ingredients coming together for what will be a very powerful, fundamentally driven bull market with institutional engagement, broad institutional engagement as the backbone for that. I'm sure we'll talk a lot about that.
Yes. Kelvin, you want to go?
Sure, hi. My name is Kelvin Ko. I'm one of the co-founders at Spartan Group. Spartan Group is an advisory and investment firm. On the advisory side, we help crypto companies raise capital, do M&A, and do restructuring. So think of it as investment banking, but focusing on crypto clients. And then on the investment side, we have 4 funds, which I oversee. So we have a directional liquid fund that's been running for about 7 years. We have a market neutral fund, which was recently launched, and we have 2 early stage venture funds. And then in terms of my history, I spent the bulk of my career at Goldman. I spent 18 years there, then spent about 3 years working in a New York-based hedge fund, doing equities long short, before coming to crypto. In terms of the one-liner on the market, long-term I'm bullish, just because of the institutionalization trend and the fact that we continue to innovate and find new use cases every cycle. But short-term, I'm bearish. I think there's more downside to token prices in the coming 6 months or so before we find a bottom and hopefully get to a new cycle.
Pranav, Kanade, I run the hedge fund at Van Eck. Been doing that since 2022. TradFi like everyone else here, I guess. Was at Millennium prior to that. So we have a hybrid fund. We do both public equities and tokens. We're kind of agnostic to the instrument we're investing in. One-liner on the market. I would say we've been in a structural kind of bear market for tokens, altcoins since 2021. That was kind of the top in terms of market cap for these assets. Obviously, the market cap topped then, but the number of assets competing for that limited pool of capital has more or less exploded to the upside. So a lot of supply, lack of demand, prices go down. So if you look at any kind of benchmark on how altcoin performance has been, it's been kind of horrendous since 2021. So I think we've been in a structural bear market. So I think that's going to persist for the foreseeable future. But within that, I think there'll be sort of 3 to 5 tokens that do really well in any given year, and that will change. So you're supposed to treat these as trading vehicles and not buy and hold and disappear.
Hi everyone, I'm Cosmo. I'm a general partner at Pantera, where I lead investment strategy and research. My day job is portfolio manager for all of our liquid products. Most of my background is from long-short equity and some private equity and banking before that, like every good old New York boy. I as far as, a statement on the market, I'd say sort of tautologically true. After a long drawdown, the risk reward for investing in these assets is much better than it has been in a very long time. I do think the tailwinds are there for there to be for this. We have a situation where prices have gone down for a long time, but the fundamentals in a lot of cases have improved, and so eventually, as my old PM used to say, price follows fundamentals, and so we are. Doesn't necessarily mean drawdowns don't necessarily mean, and oversold technicals don't necessarily mean things have to bounce here, but I don't feel like there's a lot of downside left, and the upside is pretty tremendous for investing in, to Pranav's point, a select group of high quality assets. So yeah, it's an interesting time.
Thank you. The recurring theme I think I heard was long-term bullish. Some people are currently bearish. What is it going to take for yourselves and the broader market to say, like, the market is turning now? What is it going to take? Like, is it a post-clarity passing? Is it just fundamentals improving 5 to 10x because the valuation of these assets, even the most fundamentally strong ones, are still an order of magnitude lower than you need to be in order to support the valuations that they are today? Like, is there one or two things that you think you need to individually want to call out that would change your mind about the state today, and not like long term? Sure, we're all structurally bullish long term, or else hopefully we wouldn't be at Digital Asset Summit. But what do we think it's going to take today to position yourselves accordingly for a bullish upside?
So I think I'll go to something that Cosmo said, which was eventually price follows fundamentals. And we've had some extraordinary fundamental developments across the space, and we haven't had price follow those developments. In a broad-based manner, we've certainly had individual names. So if you look at Hyperliquid versus Bitcoin, breaking out to new highs right now. So I would say we have a setup for what I like to think of as a hindsight narrative, where fundamentals looking really good, price has lagged. As I was talking about, institutions really starting to pay attention. So this has been the year of almost weekly announcements of traditional financial institutions doing more and more with crypto, touching more parts of the market. But you wouldn't know it talking to people that spend their days looking at crypto prices. So I think we're setting up this really nice dynamic where something will trigger price. Maybe it was the war, because if you look at Bitcoin versus gold, bottomed right at the start of the war. So maybe that was the start of the rotation from gold to Bitcoin. Maybe it will be clarity. Maybe it will be something else. But we're primed for this hindsight narrative of, oh yes, like prices should have been moving. Now we're getting the move with that catalyst, and look at all of the good things that are happening from a fundamental perspective.
Awesome. Anyone else want to?
Yeah, I guess my general take is look at the top 200 tokens on CoinMarketCap. I would say like 99% of them are complete trash. Like they're garbage businesses. Like I don't know why anyone would traffic in any of them, especially when you look at tech equities, right? That's your benchmark. The biggest problem for even the good ones for the longest time was that the valuation mismatch, again, relative to tech equities, was pretty large. Like you'd have like some project doing like $5-10 million of revenues and being priced at like several billions of dollars, and that never made any sense. Now, to both Seth and Cosmo's point, the 60+% correction that you've had has reset a lot of those valuations lower, but a lot of people have lost money along the way. So there's like this apathy / like this thing is kind of messed up feeling among people. That has to settle, and people need to start generating positive returns first before a lot of capital then comes back into this stuff. It's going to happen, I think. I think to your other question on what's going to get you more bullish than market, I think what's represented in the top 200 assets also have to change. And I think there's a path there, which is ideally you get Clarity Act done, and then you start to get better businesses in tokenized equity form on chain. So people can underwrite high quality businesses that have this sort of new element of their essentially stock being tokenized, better founders, and then you have this rotation. So the market structure has to really shift.
Yeah, I think it's look, all public markets are reflexive. Actually, let me take that step back. everything about businesses are reflexive, right? Even startups are reflexive in the private world, and public markets are especially reflexive. But in particular, crypto markets are very reflexive. And so, you know, as much as I do believe that the most important thing is fundamentals, the reality is price can drive fundamentals a lot for token businesses, many of which rely on trading assets. And so there is a little bit of, I'm not sure if it's cart leading the horse, which one's going to be first, but we do need some sense of either very strong price appreciation so people start making money again, and so, you know, allocators start waking up to, oh, this is an asset class I can't miss, or fundamentals become so good that price does reflect that. There's another element, and, you know, I think Pranav sort of tried to slip this in and slip this nuance in, which is that, you know, there are many ways to express your bullishness on digital assets. There's many different types of assets. You can invest in private companies, you can invest in public equities, you can invest in tokens. And right now, there is not a large enough number of investable tokens for a lot of larger allocators to take it that seriously. Now, and I'm sure many of my colleagues on stage believe that will change over time, but the reality is if there's kind of, you know, top 200 tokens, maybe there's 10, maybe there's 20 or 30 that are like have the semblance of real business model that will succeed. That's not enough, really, to generate large enough investable universe. And so, to a large extent, I am looking at my venture partners and saying, hey, like, let's keep funding really exciting young companies that are built as tokens so that the investable universe can expand. Today, we're pretty happy with what we own, but we really need more things to own.
I mean, go ahead, Kelvin.
Yeah, I'll add a few more points. So I think the first thing is that we track a bunch of different metrics, right, to indicate whether we're closer to the top or we're at the bottom. Now, obviously, we're looking at how quickly they are approaching the bottom, but none of the metrics that we track were there yet, right? So that's the first thing. The second thing is we still see a lot of supply coming on, right? Particularly in terms of altcoins, right? Every month, basically, there's $2 to $3 billion of supply. And there's not $2 to $3 billion of capital coming into the space, right? So how do you adjust that? Prices have to go lower, right? It's as simple as that. And only once prices get lower does that 2 to 3 billion maybe become a billion or half a billion, and then the supply and demand starts to make more sense, right? So that's the second thing that we're tracking. The third thing is, you know, we're shorting more stuff than we are able to find long ideas, right? And you know, you look at a lot of these projects as Cosmo and Pranav mentioned earlier. You've got trash businesses that are trading at billions of dollars, and it makes no sense. And the reason that they're able to do that is because the insiders are controlling the price, right? But at some point, the investors who invested in these projects get unlocked, typically a year after the TGE happens, and all that supply hits the market, and suddenly overnight these tokens tank 80, 90%. Right, so you have a ton of these types of tokens that are sitting out there. And so until those things get flushed out, we're not gonna see any meaningful recovery on a sort of broader basis. You may see certain tokens do well, but you're not gonna see a broad-based recovery.
So I think there's an interesting, one of the things that's been discussed a few times is how few investable tokens there are, how few fundamentally driven tokens there are. And it's interesting. I think like if we dialed back to December, there were probably December into January, there were two tokens that people were focused on. Like there were only two that were outperforming Bitcoin that were large cap, and they were top of mind for everyone. They were Canton and Hyperliquid. And Hyperliquid actually wasn't outperforming until like mid-January, and then it started taking off as commodities trading picked up on Hyperliquid. So if you look today, the breadth of the market has expanded materially from just 3 months ago. And this is what we see as we look at the progression of bull markets where, and again, I'm not trying to be particularly bold in calling this a bull market right now, but as markets heal, as they progress, you'll see more and more names, either new issues or older issues that are from a prior cycle. And it's actually typically the new issues. But you do see some of these prior cycle names reinvent themselves and get a lot of traction. We're starting to see that come together, whether it's Layer Zero, whether it's Near, a bunch of names that have been around that have been close to product market fit, but weren't quite there. And now they seem to be a lot closer to that product market fit and actually having some fundamental excitement and price excitement. So we're seeing an expanding of breadth, which I think is really interesting.
No, I fully agree. Not investment advice, but like, would you feel comfortable sharing like certain verticals that you guys are obviously multiple teams or multiple products already brought up today, Layer 0, Hyperliquid. Is there specific verticals that you think is going to have a secular bid with the institutional adoption of the asset class that you think are like primary beneficiaries of stablecoins coming on chain, tokenized assets coming on chain, all that good stuff? But yeah, is there certain verticals that you are very bullish on, short, mid, long term, and if you are so kind, maybe even specific projects?
So I'm not going to mention a specific project, but I'll give you a category that I think is kind of interesting. So I think privacy as a category is like very particularly interesting, especially like there's intersections of privacy and store value. There's intersections of privacy and AI. I think crypto's got a very unique role to play there, and I think we're finding many projects at reasonable valuations achieve product market fit, generate real fees, revenues, assuming that's relevant. If it's not a store value, it's not relevant. So I think that's an area that we are particularly focused on into the future.
Yeah, I think for us, the AI agent space is interesting just because there's so much interest in that space, and there are a few crypto projects that are sort of trying to do that in a Web3 context. So that's an area that we're very focused on. I'd say the other area would be RWAs, just given that there's a real product market fit, and with all of the traditional institutions coming into the space, I think there'll be more capital being built into the ecosystem.
Yeah, I mean, my simple framework is like, where are there large TAMs with secular growth tailwinds where I think monetizing it is possible? And I have the least amount of experience on this panel of like of managing a crypto dedicated vehicle, and I'd say most of my career has been investing in long short public or consumer internet companies, and as a tech investor, I think crypto is like a fantastic place to be spending your time because it is so wildly disruptive to capitalism, and that I do think there will be many exciting businesses being spawned, which is why I'm focusing on this now. But it's also very clear as a generalist tech investor, you're obviously supposed to be spending all your time thinking about AI. And so with the blockchain expertise that we have, then that naturally says, well, actually we're supposed to be spending as much of our time as possible at the intersection of blockchain and AI. What are all the ways that blockchain can uniquely enable AI adoption? And similarly, in what ways does AI adoption uniquely accelerate blockchain activity? I think Kelvin spoke about one, which is blockchain will be accelerated by AI agents, and we're seeing this massive boom in agentic finance and the innovation around what we can do as AI becomes increasingly autonomous and starts to interact on chain, which we think it'll naturally will. But even more exciting to me is like, how does blockchain uniquely accelerate AI, right? Like, how do we get attached to the end market that's growing the fastest? And there are just so many use cases that we're excited about, whether it's across identity, whether it's across resource aggregation, or just this idea of open source or open systems and open communication. And so we're really as a firm, we're spending almost all our time at that intersection.
So I would say I think we're at an interesting inflection with this convergence of traditional finance and crypto that's happening in real time right now, 2026. And I think DePIN, so decentralized physical infrastructure, was a little bit of a preview of this. So lots of real world applications that we saw come together a few years ago. And analyzing those tokens was more about, now there wasn't direct value capture for most of them, but analyzing the tokens was more about what's happening with this traditional looking business that happens to have crypto rails. And I think if we fast forward 12 months or 24 months from now, the vast majority of what we have in our fund is going to be traditional businesses, but instead of being traditional equities, they're going to be crypto tokens. They're going to have some component of crypto infrastructure involved that's going to accelerate the business, that's going to lower the customer acquisition cost, that's going to, one of the problems with DePIN was the businesses that were most attracted to crypto at that time were ones that had trouble with customer acquisition. So and that's a generalization, but they saw crypto and the excitement and the hype as an opportunity to kind of have this unfair customer acquisition window. But I think we're going to, as we come into this next year, 2 years, we're going to start seeing businesses that don't have trouble with customer acquisition, are really, really strong, high LTV to CAC businesses that say, we want to add even more fuel to the fire by using crypto rails for either as a superior way of customer acquisition or as a lower cost rails to build their business on. So I think it's going to be more about having analysts that are going to all the AI conferences and finding the best AI businesses that happen to be built on crypto, or finding the best fintech businesses that happen to be built on crypto, but analyzing a lot of traditional businesses with a lot of traditional domain expertise, where our crypto nativity is a great way to get comfortable with the upside potential, but it's not going to be the core part of the analysis.
Actually, speaking of customer acquisition, what excites me is the fact that a lot of these fintech companies are now coming to crypto, right? So whether it's Robinhood or Revolut and others, and we saw the announcement, I think last week, where Robinhood is going to be allowing its customers to access hyperliquid markets, right? And so if they can do that, obviously that solves the user acquisition problem that crypto's had for a very, very long time. Right, and if they can bring their customers to Hyperliquid at some point, they can bring them to Kalshi, to Polymarket, to all these different markets, right? And so that will speed up the adoption significantly. So that's something that we're quite excited about.
Thank you. Oh, yeah.
There's one quick thing that I would point out, which is crypto rails are better for financial infrastructure. And what do I mean by that? So NYC announces that they're doing 24/7 stocks by year end, and they said we're going to do that in a tokenized form, right? You look at the payments side, you're seeing Stripe lean in heavily on Tempo, their blockchain, right? Like for financial infrastructure, whether it's payments, whether it's market infrastructure, crypto is better. It was just not quite at the level of maturity that we needed 3-4 years ago. We're getting there now, and that's what's making the convergence of everything that we're seeing in 26 so powerful.
Switch up a little bit. I have like a multi-part question, but it's all kind of tied to the same, I guess, point. How do you guys think about like token holder rights? Like, where do tokens fit in the capital stack? Obviously, for cycles, and even still today, there's a lot of projects that have dual. They get a double dip. They have the equity, and they have the token. You're unsure exactly where the value accrues. How do you think about this from like when you're doing DD and underwriting, portfolio companies in your book? And are you starting to tell teams that like, do you not even participate in investing in projects that have this like double dipping equity and token market structure? I know there's been a lot of conversation around this for the past few years. Obviously, the regulatory environment is starting to change, and we might, a lot of projects might be forced to align with one or the other, maybe. But yeah, I'm curious how you guys think about like tokens. What is the purpose of them? Where do they fit into the capital stack? How do you think about token holder rights? Because this is just something we have internally from Blockworks perspective have thought a lot about over the past couple of years. Anyone could take that first, and then obviously.
Yeah, I think the announcement from the SEC/CFTC last week is going to go a long way in solving that problem. I mean, we've been largely out of most tokens for a while now, for almost, call it 6+ months. That was part of the reason, because you spend time with like founders who have, a token as well as an equity kind of thing. And one thing you'll end up with is realizing these founders think of tokens as like kind of monopoly money with multi-billion-dollar market caps. So when they treat it that way or think about it that way, it just becomes uninvestable. So that's been the problem. Now, I think what the regulators did last week is like a direction in the right solution. So obviously what I did was I took the entire kind of PDF that the SEC put out, put it into Claude, have it do a deep analysis and say, I'll give you a ticker, and you tell me, is this a commodity utility token or a tokenized equity? So if something's a tokenized equity, which if you run this analysis, you'll be surprised. A lot of DeFi tokens that you might think are commodities are actually going to potentially end up as tokenized equities unless they change that token design, or they then treat it as a tokenized equity and have the governance rights and have the required filings for that. So projects will have to make a choice. But I think this is kind of a step in the right direction.
before everyone else answers, do you think like investor trust is arguably the biggest, I guess, gap stopping from like net new capital to invest in these things? Like there are seemingly good projects, good founders, seemingly fundamentally strong, but until they know exactly where they stand when they own that token, like they're just not going to invest. Like, is that a barrier that you yourselves like face today when you're thinking about investing? And also, I'm sure there's a lot of capital that's like this edge capital that doesn't invest in crypto today, thinks it's Bitcoin and meme coins. But like, is this a question that comes up when you're talking to like capital that is kind of standing on the sidelines?
Not necessarily, but look, I think people come to crypto for two kind of main reasons, or one real main reason, which is can you generate outsized returns that you can't get in the public equity markets, right? That's the only reason you come to this stuff. And that has not been the case for the last couple of years, especially in the altcoin world, because of this problem. So I think this problem is manifested in the end result, which is you can't beat the equity markets in this asset class if you're just kind of spraying and praying.
So when we make venture investments, right, typically I'd say these days it's structured as equity plus token warrants. So that way, as an investor, you get protected, right? If they decide to issue both equity and tokens, you get both, right? And typically we would also try to understand what, if they do generate revenues, get product market fit at some point, what of those revenues go to the equity company and what goes to the token company. Sometimes to decide that everything goes to one and not the other, but sometimes when they have multiple revenue streams, they would have it be directed at that. So we try to understand that as venture investors. I guess as public market investors, because we focused on tokens but not equity at this point, we have to understand very clearly whether the token accrues value, right? So say something like Uniswap, for instance, they have token and they have equity, and for a long time, before they turn on a fee switch, it wasn't clear that over time, the token is actually what accrues value. Obviously, they've had multiple forums and debates and votes to turn on a fee switch and accrue value. And the market for a long time was telling us that they believe that ultimately the value, or a significant part of the value accrues to the token, right? So we have to make that judgment as to whether we agree with the market or we disagree with the market, right? And whether we feel comfortable investing in a particular token because of that.
That's kind of an interesting example, right? For the longest time, the debate was like, where does the value go? The equity of the token, and ultimately it got resolved, and it seems like it's going to the token, but then once that happened, everyone's like, wait, how much are the fees? And what's the market cap? That's when like people realize, oh wait, this is actually very mispriced, it's very overvalued.
Yeah, no, I think, was it about a year ago when Blockworks put out the transparency framework and like
plug token transparency framework. Yeah.
Well, which is fantastic because I mean it really met with the zeitgeist of the investment community, which was we want to see clarity between where value is accruing, whether value is accruing on the token side, the equity side. It's very clear that when you have teams that have both equity and tokens over the long run, not when they're private, but when they're liquid, you end up with big incentive mismatches. And I would say today, we almost exclusively invest in token-only projects because you need to see the incentive alignment. Like there's just so much already that you can't control, and then if you have founders that are... The other really interesting thing is like, for the longest time, when you had equity and you had tokens, again, there was a little bit of a monopoly money type dynamic that you were mentioning, Pranav, where people felt like, well, I'll issue a token for this project, and if it doesn't just have a complete rocket ship like launch, I'm just going to like abandon it and go launch another token, do another project. And when you force people to kind of dial down into one instrument and commit themselves to one instrument, you see some more longevity. Now we're in the early days of this. We'll have to have that proven out over time. But that's a bet that I think we're willing to make, that you'll see more perseverance, more longevity with tokens when the teams are really committed to the token as the value capture dynamic. Interestingly, though, when we're talking with LPs and prospects, this doesn't really come up that much. And I think that was kind of what you were saying as well. Like, you want to see outsized returns. Again, I think Pranav, like, spot on. You need a healthy value capture dynamic to drive outsized returns. And what LPs are looking for are outsized returns, which we should be able to get from higher growth, global day one. We should see outsized returns in crypto versus equities.
But the one thing I would add to all this is that if you then go in with this mindset that like most token projects and founders think of their token as monopoly money, and hence you should stay away, the ones that don't tend to stand out. And then the market will ultimately gravitate towards those, and capital will get essentially concentrated in the handful. So finding the handful is actually easier in some ways.
Cosmo, I don't believe you. Anything you want to add to this?
No, I mean, I think this is, I sort of wasn't very engaged because it's like sort of an obvious thing, I feel like, to most of the people in the Digital Asset Summit crowd, that obviously value only goes to things that have fundamental value. It's sort of, it's a lesson that crypto people have had to learn for some reason over the last few years. But it's sort of like always been true, and that's this law of gravity. And it's also always been true that there are multiple cap structures and multiple different types of ways to cut how you decide to distribute that value. It does so happen that tokens, we think, are, or I shouldn't say we, I do believe that people on this panel believe that tokens are a really unique form of capital structure and capital formation mechanic that I think has many reasons to exceed equities in many ways, but that a lot of people haven't treated them with that level of respect, both in the developer community and the investor community. We're starting to see that rationalization play out, which is good, because ultimately, to your point of trust, like, yeah, companies trade based on trust, right? When you value a company, you value it based on the durability of its earnings and how much you trust the management team to make decisions that benefit the equity holder or the token holder. That's why U.S. equities trade at higher multiples than emerging markets equities, right? And so I'm hopeful that as all this becomes more transparent over time, we'll start to see that play out too in tokens.
Awesome, thank you. Switching gears to talk more about like regulatory and upcoming midterms, back half of the year. How do you think about that, like as you're underwriting and doing due diligence? I guess underwriting your investment process heading into 2027. Clarity is not officially passed yet. Hopefully we have that sometime in Q2. But does post-clarity change your thesis on crypto? Or are you just kind of assuming like that's going to get passed? And also, how do you think about the changing dynamics in Congress? Republicans own, I'm not a political expert, but I think they're largely in control today. There's maybe some headwinds on that side where the Democrats might be coming back in control. How do you think like the regime changes in the admin? And like right now, the admin has never been more bullish on digital assets, but that could easily change tomorrow.
Yeah, I mean, I think what's really been exciting to see this year is, well, one exciting, not exciting. On the not exciting front, market structure legislation has taken longer than I think many people in the industry had hoped. It seems like we are making meaningful progress now, and there's a shot that we get it passed before midterms. But if it's not in the next couple months, it's not going to happen for some time. It's very nice. The nice to see is that in the interim, we've seen the SEC and CFTC step up and say, hey, without market structure legislation, we're going to start publishing some of the guardrails and really some of the text that we expect to play out in market structure legislation, and let the market know that, hey, we are going to start guiding people towards and regulating people in this fashion. And that clarity is really nice to see, even in absence of legislation, which is ultimately more important and more permanent, but it's very nice to see the regulators step up in the interim in case it doesn't happen.
Yeah, I think it's critical to get the market structure legislation through, hopefully before the midterms, because it's easier than after the midterms. And I think that could serve as a catalyst for the broader space. But also, once you have that through, then the financial institutions that want to come into the space can have a more, a clearer direction, right? And they can start getting the ball rolling in terms of getting involved. And I think once you have the financial institutions involved, you have a very powerful group that can lobby for the industry, right? And then whether it's the Democrats that come into power or it's Republicans that stay in power, I think it matters less because you have that group with the vested interest to keep the industry growing.
Wholeheartedly agree. I mean, I would say I love the movement that we have in Congress with obviously Genius last year, Clarity now. I love the executive orders. I love the regulatory movement. But in the end, commercial adoption is the way we de-risk the regulatory side for the space, like unambiguously. And what's beautiful about crypto is like, it's taken us a long time, but we're kind of like getting to, and I'm just speaking like broadly as the industry, we're getting to this point where like people realize fundamentals matter, you need value capture in the tokens, you can't double dip with equity and tokens, you need to narrow that down. So we're kind of like, we're getting on the right path. And as we've talked about a bunch of times on this panel, like the momentum that's building right now, the convergence of crypto and traditional finance, that's driving that initial. And on the payments side, both payments and market structure, that's what's driving this inflection in commercial adoption, the potential that's coming together. And that's the real de-risking. And then clarity is like the icing on the cake. It's obviously very important icing on the cake, but it's the icing on the cake with the commercial adoption, hopefully de-risking, regardless of which party is in power when we go out a year, 2 years, 5 years.
I'll take the question maybe in a little bit of a different direction, but it's more of a follow-on from where you are, which is, so we raised a lot of dry powder in our strategy probably like 6-9 months ago, and we've been waiting, and a lot of our LPs ask us, when are you going to get back in, what are you going to do? And oftentimes it's like, well, is it regulatory? And I say, well, it's what is abundant and what is scarce as you look at products, right? So SaaS used to be somewhat scarce, like good SaaS products. Now the world's saying that's kind of software is abundant. And so the world's repricing a lot of different assets. So as we look at crypto projects, I think that the question we ask is, as more people use this product, does the product itself become more scarce? Hence, I go back to my earlier point on privacy, because there's one category in crypto where as people use said privacy product, that the privacy feature becomes stronger. And that network effect is permanently scarce. And so that's an interesting value proposition in this construct of what's happening in the rest of the world. So that's an area where we're focused on. So that's a very small subset. The other thing I've been thinking about a lot is everything in the digital world seems to be predicated around sort of this user experience for a human angle. And I think where we're heading is really around user experience for an AI agent. Like, is said AI agent going to find this product interesting and use that product? And that's more relevant to things around DeFi and RWAs. So that's something that I've been spending a lot of time on asking that question.
All right, I know we're almost coming up on time. I'm just going to ask everyone to kind of have some closing remarks. Specifically, how do you think from today, 24 months from now, we're sitting on this panel, same exact conversation, State of the Union of liquid token markets. What changes? Open-ended. Yeah. Sorry, you, Cosmo.
Yeah, well, I mean, let me bring this back to the prior question, which is that I think market structure legislation will be important and that we get because it will set the rules. But that day itself, nothing will change. Right? What it enables is for all the entrepreneurs that we're talking to finally stand up and say, okay, now we have the rules of the road. We can actually launch token-based companies and where we can return value to that token. That will take time for that to play out and create real businesses that are investable, that all of us on this stage get excited about. I think 24 months from now, I'm very confident that the seeds that are being sown by market structure legislation and these really important topics around respecting investors and proper capital allocation will drive a pretty meaningfully large universe of investable tokens and really exciting innovation that we will be able to participate in as token investors.
I don't know if it's a prediction, but it's a hope, which is I was looking at how I spend my my money every month, and a lot of it is on like Starbucks and ride sharing and all this kind of stuff, right? I hope that regulatory clarity allows those large public companies to tokenize their stock and start giving me some stock for using their products so much, like loyalty type stuff. That'd be an interesting unlock.
I mean, 24 months from now, we'll be thinking about the next election. That's one thing. I think the room will be fuller, hopefully. And I think, I think the way that we go about managing risk, the earlier panel was talking about 10-10. And obviously with all the institutional capital coming into the space, I hope that doesn't happen again. Because 10-10 was devastating to the industry, and I think we need better risk management systems. We need stronger players, and Yeah, and some of the AI agents hopefully will be trading alongside us. So those are some of the changes I expect.
So AI has come up a bunch. I spend a lot of time on AI, probably half of my time right now, and still 100% of my time investing in crypto. But a lot of time on where AI is bringing things or driving outcomes. And I think every month, every 2 months, the world is just radically different. The cutting edge of startups and software development and the way we engage with systems out there. So in 2 years, I think everything we're talking about is going to look radically different. I think that's going to extend to equities. So I think we'll have crypto eat the equities world, eat the payments world, but it's just going to be infrastructure. And a lot of what is going to be enabled by crypto is going to be profound and game-changing. It's going to be all the things that we've been talking about for the last decade actually coming to fruition in a way that rhymes with what we've been talking about, but with agentic AI kind of in the background as well. So I think it will be radically different from anything that we're looking at right now. It will come into vision like as an exponential curve, like week on week, month on month. I think crypto is going to be a core part of what's powering that.
All right. Well, with that being said, that's all the time we have for today. Thank you all for your time. Thank you all for listening.
Thank you.